Hello, everyone. Welcome to the first series of the simple price action entries. And today is the first episode. We're going to talk about the levels in the market, the levels of the market. Okay. We're going to talk about the support and resistance, and we're going to talk about the all levels that we have to consider even before looking for those entries uh, that we are going to take. So this series is going to be a very good series for you all, and this is the first episode. This is the first episode. So the first episode, we're going to talk about the levels in the market. Okay. So what are levels? Levels are the price zones where the market often reacts. Okay. So we normally know that we have two levels. We have the support levels and the resistance levels. The support levels is like a floor, normally in the bottom. We're going to talk about that. And the resistance level is more like a ceiling above the market, okay? Above the market. So it looks like similar like this when we are drawing levels, okay? If this is the market, above here is what we call resistance, and below here is what we call support. Okay, so when we have a market like this, that means here below is what we call support, and here above is what we call resistance. Okay, in terms of um, a bullish market structure, and in terms of a bearish market structures, below here we call some support and resistance. Okay, now those are the two main levels in the market, the two main levels in the market. Now, we have uh, inside these two levels, we have types of levels. Okay. The first one, which everyone, I think everyone in the world, most of the traders know about it, is the horizontal levels. And mainly, it is based upon the highs and the lows. Okay. And we mostly concentrate on the candle closure. Okay. The candle closure of it. So it's more like everyone knows about this. Okay. So the more times price touches the level without breaking it, okay, the stronger the level it becomes. And until it finishes, it finally breaks that level, then the level flip the role. So when the level is, for example, a support, and that level is being flipped, then it turns into a what? A resistance. Meaning when we have a level like this, okay? When we have a level like this, okay? So, for example, if the price touched a same level for multiple times, let's say this is a resistance level, and then if that level is being breaked, it's been flipped, that level it turns um, from the resistance into support. So mainly this is how it is. Okay, mainly this is how it is. Okay, so same applies when the resistance price breaks the resistance, it turns it to a support. So this is horizontal levels. And of course, we have psychological levels. Mainly, this is um, we concentrate on the numbers, okay? On the numbers. So sometimes someone can tell you, okay, mark as a level at a certain number, a certain price, okay? For example, maybe 1900, okay? Or maybe 2000, like that. So those also can be termed as levels. Okay, so we call them psychological levels. Okay, so mainly these numbers may give an information where sometimes uh, we can say most of the orders are in a certain price. Most of the orders, maybe buyers or sellers are placing orders at a certain point. So those can be termed as levels. Are you getting it? Are you getting it? So thank you. We have also dynamic levels, and mostly we use these levels in terms of um, indicators such as moving average. We can use even trend lines or channels, and most of the levels like this, we use indicators. For example, when we have maybe a certain trend line like this, an uptrend, if somebody draw a trend line here, so that may termed as a level in the market. Okay, these trend lines can be termed as levels in the market. Okay, in the market, or sometimes somebody can just draw a what somebody can just draw a Fibonacci, for example. Um, um, for example, somebody can draw a thing like this. And you see around a certain point in the Fibonacci, and that can be marked as a level. For example, 50% of that can be termed as a level, and so on and so on. For example, if we put the price range from there, and you see that is a level. So you can use trend line, you can use those moving average, and also and so on. So mostly this type of level, we use those indicators. Okay, indicators. And why do levels matters? Why do levels matters? Okay, first of all, it is entry zone. So we use levels as entries. Okay, we use levels as entries. For example, if you want to buy, meaning you will wait for the price to return to a support level for you to buy. And if you want to sell, you need to wait for the market to return to the resistance level in order for you to sell. So it can be used as entry zone. And sometimes also we use it for stop loss placement. We use that to calculate the risk that we are taking. Okay, and of course, the targets. Where will the price go next? For example, if you take the buy from the support, okay, you need to look for a resistance level where the market may turn or may end that move from that support. Okay, so we use these levels also for the target. We're going to see in the chart. We're going to see that in the chart. So how do we mark levels in the market? How to spot the levels? Okay, how to spot the level. So mainly the market moves from one level to another. Okay. So if the price moves from one level to another, we need to know how to spot these levels. Okay. We need to know how to spot these levels. Now, in this series of simple price action, okay, and this is the first episode, is more like an introduction. Okay. So we use candlesticks, okay, to mark these levels, okay? And we have two main uh, uh, levels in the market, which are the support levels and the resistance levels, okay? And uh, in these two levels, okay, for example, in the support levels, we see more like bullish candles appearing after a bearish candle. Okay, so that is the price where you can mark a level. And in the resistance level, we see a bearish candle appearing after um, the bullish candle. Okay, and we're going to see that in the chart. So let's go in the chart. Let's go in the chart. And before that, um, we can have so many um, scenarios like this, where like a bearish candle appearing before bullish, or a candle appearing after a bearish. So we can have scenarios like this, but not all these scenarios can be termed as levels. So we need to know which one is a strong level. Okay, we need to measure a strength of a level. The stronger a level, that determines that is the true level to mark. Okay, so a strong level, we look the body size of it, where if a bearish candle comes after the bullish candle, we need to see those candles size. Okay, uh, if it is 50% or 100% of it. Okay, and a weak level is always bodies of the candles are 50% below. So we're going to see that in the chart. We're going to see that in the chart list. Let's open the chart here. Let me explain that scenario. So for example, this is what? This is a support level. Okay, I marked out this support level. We need to see candles. There's the okay. This is sorry. This is, let's say this is a what? This is a resistance level. So we have a bullish candle. My bullish candles always be in color blue, and my bearish candles mainly be in color black. So this is a resistance level, okay? And in order to know that this level is strong, we need to look the body size of those candles, okay? And the candle closure, okay? So when we see a candle closing like this, that is a strong level. Or sometimes it can be more like this. Sometimes this can be more like this, or sometimes it can be more like a 50% of it, at least 50% of it. So if you see that, that is a strong level. But if you see a small body below 50%, that is not a strong level. That is not a strong level. So mainly we can see the price going up from here. Okay, we can see the price going up, and I'm going to give you some examples. Okay, so in case of a support of a support level. Okay, so let's change the color here. So let's change the colors. Let's change the colors. Okay, so here will be black. Here will be black. So okay. Good. Now, so in the support level, we look also the candle closure. Okay, after the bearish candle, we have a bullish candle. Okay, now we look that bullish candle closure. If that bullish candle closure closed at least above 50% of it, that is a strong zone. Sometimes it can go beyond. Sometimes can be just at least 50% of that, or at least same size of it. Okay, that is a strong level. If it is below 50%, that is not a strong level. That is not a strong level. So it can be the market may go bearish from there, or we can have a ranging market structure from that place. So that is how we identify whether the level is strong or it is not strong. So let's go in the chart. So let's go in the chart and we can see some of the examples. For example, today, you can see today here, currently, you can see the market created a strong level of what? Sorry. Sorry, let me change the color here a little quickly. Okay, no, you can see here the market created this strong level here. We had this oh, sorry. I inverted the chart. So, okay, we can see here, this is the bearish candle and this is the bullish candle. We can see the market created a level here, a level of what? Of support. And the candle here performed at least 50% of this candle. So this was a strong candle. And we can see the market after that, it went up at least 20 pips right now. It's running. Okay, you can see another level right here. You can see the market created a level right there, and the candles were at least same size of it, and we can see that was the strong level of resistance, and therefore the market went down. You can see that. We can see that. Okay, we have this also. This was a resistance level. You can see. We can see. And of course, we had levels here. You can see. We had levels here. We had levels here. You can see. See? So that is how we mark these levels. So this is a very important subject because next we're going to learn entries, the simple entries, simple price action entries, and we are going to use more of these techniques to mark these levels, So thank you very much. And see you on the next video, the next episode, where we're going to look the first entry type of this series of simple price action. So thank you very much. See you on the next episode.